All right, y'all. Today we are going to be talking about candlesticks as well as support and resistance. So make sure to like the video, subscribe to the channel, and click the bell for notifications because you do not want to miss one of these free trading course sessions. Support and resistance, one of the most fundamental things about technical analysis, the bread and butter of all traders, is support and resistance. It is the most simple thing, guys, but it is the most powerful thing to getting into a good trade. And before we get into the session, I just want to tell you that, especially if you're a new trader, a lot of times people learn support and resistance and then they feel like, you know what, it's too simple. It's just too simple. And then they start getting into Elliott waves and they start getting into all these crazy different forms of analysis that are super complicated, and they end up with paralysis of analysis. But I want to assure you that the most basic of things when it comes to trading is the most powerful. The more simplified you can make your trading, the more successful you are going to be. So let me preface this entire session with these words of wisdom. Guys, this course is sponsored by Antarctic Exchange. Link in the pinned comment and the description of this video. The best exchange in the world. It is something completely groundbreaking that has never been done before. This is a decentralized exchange, which basically means, guys, everything on the exchange that you're trading is 100% self-custody. You are not keeping it on a third party. You are not depositing it into an exchange. You are keeping it on a hard wallet, on your ledger, on your Trezor, on your hard wallet, or in a hot wallet, or any wallet you want. You can connect to the exchange. Everything is self-custody. And because it's decentralized, this means no KYC ever. Doesn't matter where you live, no KYC. Every single filled order is 100% transparent for all to see on the blockchain. Deep liquidity, no slippage. And for the Casper crew, which means anybody who signs up using my link, we get the lowest fees, lower than anybody else trading on Antarctic Exchange. 0% limit order fee, 0.015% market order fee, better than any other exchange right now. And the best part of Antarctic Exchange is the ownership. If you trade on the exchange, you share in the fees. That's right. You get paid other people's fees just by trading on the exchange. You can also provide liquidity to the exchange where you'll get paid liquidation fees. In addition, you get to own the exchange token, which is basically like, you can think of it as owning shares in a company, where as the value of the exchange token goes up, you are getting paid exchange fees in this token. This token is appreciating in value over time. And because we are all providing liquidity to the market, because we are all working together to make this exchange great, together we all benefit, not just from the trading features, but from the actual exchange infrastructure, making money passively just by using this great platform. So link in the comment and pinned comment and description. I highly recommend you check it out right now. If you are looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Boyan, man, in one live stream, dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. jasoncaspertrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. So I want to talk, before we talk about support and resistance, about candlestick patterns. Now, if you are totally new to trading and you don't know anything about this chart, I highly recommend you check out my video, Jason Casper Tradingview Tutorial. This is a free video on YouTube. I uploaded it about 3 years ago. It's still very relevant. This will go over pretty much everything, how to use and customize Tradingview. All right. Now you can ignore the sales pitch in here for my course because, well, I'm giving you a free course right now. But check out this video. It will show you everything about how to use TradingView. A few things are different, but in general, it goes over exactly how to use and customize TradingView. So instead of doing a whole new session on it, just search in YouTube Jason Casper TradingView tutorial or watch some other TradingView tutorial. I want to talk about candlestick patterns. What are candlesticks? These things you see right here are candlesticks. These blue and purple things are candlesticks. What do these mean? These are ways of talking about price. And man, the Bitcoin price is pumping like a wild lady right now. This is crazy. As I'm making this course, I'm making thousands of dollars. No wonder I'm giving this thing away for free. This is a candlestick, all right? A candlestick. How do you dissect the anatomy of a candlestick? Well, a bullish candle is going to be green, or if you're a cool person, blue. And the body of the candle right here is going to tell you where the price opened, where the price closed, and then these wicks on the upper and lower part of the candle right here, it's going to tell you the overall high price during that session and the overall low of the price during that session. All right. For a bearish candle, the top right here is going to be where the candle opened. The bottom right here is going to be where that candle closed. And then the wick is going to be the low of the candle, and the wick up here is going to be the high of the candle. It's called open, close, high, low candles. All right, open, close, high, low candles. Now, when we go back to a chart, notice that the candle itself opened up. It started to print right here. Actually, let's go to the one previous. You can see this candle right here. It opened up at the price of 93,864. It came down to the price of 93,803, but then it came back up above where it opened, and it closed up here at the price of 94,194. This wick down here signifies where the candle came down to below its open price, but it closed up here. All right, this purple candle opened up right here at the price of 93,782. The price wicked up to 93,873, but then it came down, wicking all the way down to 93,526. But then the candle closed right here. Okay, now what do I mean by candle close? Well, this has to do with different time frames. Each candlestick represents a certain amount of time of price action. You can see here that there are different time frames to view the chart. You can look at the daily time frame. All right, on the daily time frame, this is the testnet exchange here, so I'm having a glitch. So I'm going to go over to TradingView. The daily time frame, each candle represents 1 day of price action. So far, today's candle is a purple candle. It opened up right here at the price of 94,474. It wicked all the way down to 89,060, and it's currently chilling at 94,364. But at one point today, it did wick all the way up to 95,859. So if this candle were to close right now, what would we know about it? We would know it opened up here at 94,508. The price during the day came all the way up to the high at 95,846. It came all the way down to the low at 89,087, and then it closed right here at 94,357. Now, if a candle is printing or closing below where it opened, it will be purple. If it's closing or printing above where it opened, it will be blue. Let's look at this blue candle here from the 10th of January. It opened up right here at the price of 92,478. It wicked down to 92,124, but then the price came back up above where it opened. It wicked all the way up to 95,815. Then it came down and it closed at 94,720. And then we opened the next candle right here at 94,720. We wicked all the way down, we wicked all the way up, and then we eventually closed as a purple candle. Now this on the daily time frame is giving you 1 day of price action. So up here on TradingView, you have the different time frames. All right, watch my TradingView tutorial to see how to get all these different time frames up here. But if you go to the 4-hour chart, each one is representing 4 hours of price action. You go to the 1-hour chart, each candle represents 1 hour of price action. You go to the 12-minute chart, each candle represents 12 minutes of price action. You go to the 5-second chart, each candle represents 5 seconds of price action. Okay? Now, when we take a look at these candlesticks, there are a few patterns that you should familiarize yourself with. You can just Google candlestick patterns here. Honestly, I don't necessarily use these too much in my trading. The ones you really do want to pay attention to are these types of things, all right? Hammers and hanging man, right? Or shooting star candles. These are bullish candles. These are bearish candles. The reason why they're bullish and bearish is you want to think of the price action kind of like this, guys. If you see a big wick, like for example today, what is this telling us? This is telling us that the candle opened up and the bears gave it a really good attempt to push the price to the downside, but they weren't able to. And the candle closed now like this. Now let's say this candle closes blue and it looks like this hammer candle here, or even if it closes purple like this hangman candle here. This is a reversal pattern, right? This is telling us that the bears gave it a good shot. They really weren't able to do much, and the bulls really ended that day in a win. And the inverted hammers and the shooting stars, this is telling us the bulls gave it a good shot, but then the bears came in and closed that candle pretty bearishly. Other candles that you should really be aware of are the engulfing candles. So let's an engulfing candle. Let's see. Where's the, okay, here we go. Yeah, the engulfing candles, guys, are really important. An engulfing candle is also a reversal sign. If you're in a downtrend and you're printing a whole bunch of red candles, and then you see a green candle that completely engulfs the body of that previous red candle, it's a big signal that the bulls are starting to gain control. On contrary to that, if we're moving up and then you see a big bearish engulfing candle where the body of the red or purple candle completely engulfs the body of the green candle, that's a bearish signal. Right? Let's see if we can find any examples here of a bearish engulfing candle. Look at this one right here. So we printed a blue candle, and then we had this bearish engulfing candle on the daily time frame. What happened after that bearish engulfing candle? Well, we had 2 more days of downside. All right, 2 more days of downside. Let's see if we can find a bullish engulfing candle. Okay, look at this right here. We had a purple candle, and then the next blue candle completely engulfed the body of that purple candle, which led to our next big move to the upside. Now look at this, a shooting star candle. We were getting a move to the upside, and then we saw a shooting star candle, something like this, where the bulls gave it a good shot, but then the bears ended up winning that day of price action right here, and that resulted in multiple days of downside. Now we did have a bullish hammer candle here, but that didn't result in much. And these candlesticks are not always going to tell you what's going to happen in the future, but you'll notice a lot of times they are good indicators, especially bullish engulfing candles and things like that. Look at this. This bullish engulfing candle right here on November 5th resulted in a massive push to the upside. This bullish engulfing candle right here on October 11th, big move to the upside. Let's see. Bearish engulfing candle right here, big move to the downside. So yeah, these are candle patterns that you really kind of want to study, familiarize yourself with. And really, guys, it really is just common sense. It really is common sense when you think about, what does it actually mean when the price tried to come up here, but then the candle closed down below, or price tried to come down here, but then the candle closed back above. It's a failed attempt to break down from this zone right here, right? It's a failed attempt. Just like it was a failed attempt to, for example, like when we got this candle right here on December 5th, right? Price tried to break out, but it was a miserably failed attempt right there, and we closed back underneath. All right, so that's the deal with the candlestick patterns. Now I want to talk about time frames. All right. Looking at the price action from different time frames, this is very, very important. People always ask what time frame is best to trade on. Here's the thing. Every single time frame is going to show you the same exact thing, but it's going to show you it in a different resolution. The higher the time frame, the more zoomed out you are, and the lower the time frame, the more zoomed in you are. Okay? This is very important for a number of reasons, because the more zoomed out you are, the more you can understand the macro context of the market. If we were to go to, let's say, the 4-hour time frame, you might think to yourself, oof, we're kind of in a downtrend here. Price is making lower lows and lower highs, right? But if we go to the weekly, we could say, oh, wow, we're not really in a downtrend. We're just in a little bit of a consolidation in a massive uptrend. We've seen a 600% move up on Bitcoin in the last few years. Then you go to the daily time frame and you're seeing a little bit more information. The 4-hour time frame, you're seeing a little bit more information. The 1-hour time frame, you're seeing more information, and so on and so forth. And so what you need to learn how to do is familiarize yourself with these different time frames and learn how to look at them all at the same time in order to get the overarching picture of what the market is telling you. Okay, so the first major aspect of these time frames is whenever you're doing your analysis, you always want to start on the higher term time frames to understand the larger context of the market. And what you're going to do is you're going to look and see what is price doing on the high time frames. My high time frame bias right now is bullish. Why? Because I can see that since 2022, price has been in an uptrend. An uptrend means we're making higher highs and higher lows. We made a low, a high, a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And so what can we expect? A higher low and then a higher high. The trend is your friend until all of a sudden we start to make lower lows and then you change your bias, right? So on the daily, the weekly, we can see we're in an uptrend, okay? So we know the higher term time frames are bullish, meaning if we're going to come down to key support, which we'll learn about in a second, we should be looking for those big swing long trades, right? And then as we zoom in, we're actually looking for entry points on lower time frames, which is why I call the higher time frames my environmental time frames, and I call my lower time frames my execution time frames, okay? Now I want to transition into support and resistance. This is, like I said, the bread and butter of everything that you need as a trader. All right, so what is support and resistance? Well, support is just what it sounds like. It's a place where price will find a bounce if it gets a drop to the downside. A good example of that would be this line right here, where you can see the price got a bounce from this level. And resistance is where price gets a rejection if it gets a move up, okay? So right here, you can think of support and resistance like floors of a house. All right, if you're in the floor of a house, let's say we're going to build ourselves a house, all right, and we've got the floors of a house here. We've got our attic, we've got our ground floor, and then we've got our basement, which is down here. All right, if you're in this floor of the house, if you jump up, you hit your head on the ceiling, boom, you get a rejection. You come down, you find support on the floor. All right. Now, that's because you didn't take the stairs. Now, if you take the stairs, boom, now you've broken out of that resistance. And here's something that's very important. What used to be resistance always becomes support. And what used to be support always becomes resistance. Let me show you what I mean by that. Right here on the 8th of January, 2024, we wicked up to this very key level of resistance. This was actually a Fibonacci golden pocket from the all-time high to the low, but we'll get into that later. And we got a rejection from this level, okay? It was our resistance. We hit our head on the ceiling. We came down to the support, which at this time you could see price finding a sticking point right here. We get a bounce from the support, and then we break out of that resistance. Now, once you break out of a resistance, you keep that level on the chart, because guess what happened on August 5th? We come down to that exact level, and we find support. So resistance broken through always becomes support, and support broken through always becomes resistance. Here's a good example of support broken through becoming resistance. Take a look at this level right here. On Monday, May 9th, 2022, we formed a low. It was support. And then throughout the entirety of the bear market, that level was our resistance. We formed our support here. We lost it. Support lost becomes resistance. Resistance. We break out of that resistance. Guess what? Resistance broken through becomes support. And after we break out, we come back down and we find support, right? We're thinking of it as like floors of a house. Once you come up to the next floor of the house, what was the ceiling in the basement is now the floor on the next floor. And what was the ceiling in this floor right here is now the floor again up here, which is why I'm been telling people for a long time that, you know, we could get a drop, and the key level to look at is the low 70s. People say, Jason, you're so crazy for even suggesting Bitcoin could go to the low 70s. Well, look at how these levels are respected, guys. I mean, just look at this bull market, bear market cycle. When you see these major levels of support all through the bull market, just so happening now to be resistance in the bear market, and then you see resistance acting as support, and then this is resistance for 8 months, you got to keep this level on the chart, right? This is how you're going to find support and resistance. Typically, when you're looking for trades, you're looking to long support and short resistance, or basically long support, take profit at resistance, short resistance, take profit at support. And what I want you to get used to doing is I want you to get used to going on these high time frames and marking out these key levels of support and resistance that we have here that are just so obvious, right? And then what you're going to do is something called top-down analysis. We're going to get into that more in the next session, but you're going to start in the high time frames, then you're going to go to the lower time frames, and you're going to mark support and resistance on the lower time frame. So now we can see here on the daily time frame, we have this obvious area of support right here. Support, 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 support. So yeah, we marked this level out, which is why, what is this? This is my album cover, which is why I was looking for 89,909 for the long trade on Bitcoin, because I knew that was key support. And so therefore, I marked that level on my chart, and this is why I'm currently in a long trade from support, where a lot of people are getting scared saying, oh no, sell everything. You know, we're here saying, okay, it's support. What happens at support? Usually you get a bounce, right? We had a very key resistance right up here. You can see that this area was our resistance. We finally broke out, and then it was our resistance again on December 19th, and then look, resistance once again, which is why I took a short trade from that level, that the setup we gave in the Casper Crew VIP Discord, short from that golden pocket 1025, because it was resistance, where a lot of people are getting very bullish. This is it, the new all-time high is coming. We are looking for the short trades. Why? Because it is resistance. All right. Now you could be pretty profitable with good risk management, simply blindly longing support and shorting resistance, but we're going to be adding other tools onto this as well. Then you can go down to the 1 hour time frame, and you know, you're going to be marking levels of support and resistance. Now there's something I do want to point out here, which is this. This is going to be very, very, very important for you all as you are trading on your journey. People always like to wait for these massive moves on Bitcoin. They like to look for something like this, the euphoria, the Trump pump, the big move, right? Most of the time though, guys, most of the time, the asset is always trading sideways. Most assets, most of the time, are trading in a sideways range. And if you're new to trading, I want you to drill this into your head. 90% of the time, the asset is going to be trading in a sideways range. 10% of the time, it's going to be getting a massive move. And that 10% of the time is where people FOMO, it's where they lose money, it's where they make stupid emotional decisions. But most of the time, the asset is simply trading in a massive sideways range. And so what you need to get used to doing here is looking at these charts and asking yourself, where is the sideways range where I can find my support and resistance on? The reason why this is so important is because if you focus on trading support and resistance instead of trying to chase the big move, think of it this way. If you just generally long support and short resistance, you could have taken a long trade at support, right? Hit a nice take profit. We come back down to support, take a long trade, right? Hit a nice take profit. We're at resistance. Take a short trade, hit a nice take profit. Come up to resistance, short trade, like long, short, just keep longing and shorting, and eventually you're going to long support and get wrecked. But you had 1 win, 2 wins, 3 wins, 4 wins, 5 wins, and then that 6th trade was a loss. As opposed to always hoping that your trade is going to be that big trade that breaks out. Let's assume every time we come up to the top of this area, you assume we're going to break out, right? What would happen to you? You would have gotten wrecked once, twice, 3 times. You've gotten wrecked 4 times, and you never would have broken out. You would have taken all losses just looking for the bounce. Instead of just saying, okay, we're at support, going to look for a long. At resistance, going to look for a short. At support, going to look for a long. At resistance, going to look for a short. At support, going to look for a long. All right. And then eventually one of those trades gets stopped out, right? That's the mindset you need to get into. People always ask me, how do I get into these perfect entries? You know, I don't know if this trade is going to get stopped out or not. But if let's say this trade does not get stopped out, in hindsight, people are going to ask, Jason, how did you long the exact buy? What? Impossible. Must be a demo account, Jason. No, it was support. And it looks awesome if this is the big breakout trade, but most of the time, this is not going to be the big breakout trade, right? Most of the time, this probably maybe just come up to resistance, and then we get another move back down, or maybe, you know, I hit a take profit 1, and then it gets stopped out after a take profit 1. Most of the time, you're going for those small moves. Sometimes, you just so happen to take a trade at support or a short at resistance, and it keeps going, and then it looks epic on paper. But in reality, you're just sticking to the process of support and resistance. So this is very, very key. And really all you need here, guys, is nothing special. You just need to look at the chart. And in general, if you can identify a sideways range on any time frame, You just draw a little box around the top. You draw a little box around the bottom. These are going to be the zones where you look for trades. You don't need fancy tools. We're going to get into the fancy tools. Don't worry. We're going to get into giving, how I get the exact levels like this. We're going to get into that. But in general, all you need is two boxes, one toward the top of the range, one toward the bottom of the range where price finds support and resistance. And if you simply wait for price to come to these levels and plan your trades around these levels with good risk management, you're going to be ahead of 99% of traders. I just pulled that number out of my booty. But you're going to be ahead of most traders because most traders don't think like this. Most traders are the kind that are like, this is my big trade where we're finally going to get the big pump up to 200,000. No, that's the wrong mindset to have. If you're in here to make money consistently over time, you look for the sideways ranges, you draw the boxes, support and resistance, you look for shorts at the highs, or at least take profits on your longs, you look for longs at the lows. That's how you're going to be consistent over time, guys. So as we progress through the course, we're going to talk about how to get more precise levels here so you can look for those trades like, 89,909, where I looked for this ninja entry because I knew this was such a key level. So that's it, guys. Make sure to sign up to Antarctic Exchange, the best exchange in the world. Lowest fees right now in the game, especially for the Casper crew. And this is going to change the name of the game. God bless you guys, and I'll see you in the next session. Peace.